Hello guys, this is Sanjay here. Today I'm going to make an income statement with the adjustments. So here you will learn about the outstanding salary, prepaid rent, and how we calculate interest on loan and how we calculate depreciation as well. So before I just gave you the simple terms like how much you have your revenue and cost of goods sold, but now we are going to calculate everything. So it's a good one to understand and learn all about the income statement. So we just go by revenue. So these are your assumptions. So you take as an assumptions. When you get the real data, you can make it yourself. So this is total units sold. How much? 10,000. Selling per cost $10. Cost per unit $8. That means uh, your cost when you produce this unit, you incur your cost is $8, but actually you are selling like $10. That means $2 is profit, your gross profit. So just go there, take 10,000 into 10. So this is your revenue, this is your selling price. Then cost of goods sold, I already told you cost of goods sold mean how much money you spend on the production of this particular unit. Go there, take unit, multiply by 8. So this is your cost of goods sold, the gross profit, revenue minus cost of goods sold. This is your gross profit. Now we calculate gross margin, gross profit divided by revenue. If there is already in a percentage, you doesn't need to multiply by 100. So just go 20%. So now we go to salary and benefits. If you're paying any salary or any benefits to the employees, then you have to calculate. So how much your salary is? Salary is 8,000 and 200 is all 2,000 is already um, total salary is 8,000 and outstanding salary is 2,000. On outstanding salary means you didn't pay but you are still owing to the employees, maybe because of some reasons. So we add outstanding. That means at the end of the year you have to pay uh, at the end of the year you already paid like 8,000 and you still owing 2,000. Maybe you paid in the future some at any point. It's depend upon the company. Then we go by the rent. Rent is 5,000. That means 500 you already paid in advance. So that means you doesn't need to pay. You already paid that. So we deduct what we already paid that. If you have an outstanding, you have to add, and if you have a prepaid, then you just minus. So means total 5,000 is the rent, but 500 you already paid in advance. So we go by the salary. Salary, no, depreciation and amortization. There is a depreciation. So as I told you, depreciation is a wear and tear of asset due to the passage of time. So here we have a asset of 50,000. Depreciation is 2,500. So into 25%, right? I already put 25% here to calculate. So your depreciation is 12,500. So total sum and total. So 27,000 is your operating expense. So now we calculate operating profit. So this is your gross profit minus operating expense. That's 700 is your loss. Definitely your gross profit is 20,000, whereas your expenses are much, and then your gross profit to 7,000 is your loss, operating loss. there is interest and everything. So what we do, we increase a little bit put cost of goods sold down. I think put this down. That if you change it here, 5, everything will be changed. So you have a 23,000. Or if you change the selling price as well, so all right. So if you get your selling price, cost per goods sold is selling price is 1500 and cost per unit is 5. So you get your profit 67% and operating profit is 73%, so that we calculate the other things. Okay, so now what we can do, take your interest is equal to how much loan you got is 1500 into 5%. So you will get your interest 2500. Others, if you have others, put, if you don't have, need it. So total expenses, rating margin, if you can put this down there. Okay, so now we'll calculate your interest, the expense. There is no other expense. Worry about it. If so, your total expenses is it doesn't need this one. Make it simple. So now this is your interest, and you have to calculate your earning before tax. Tax. So by profit minus interest, you will get your earning before tax, which is 70,500. Now we calculate tax, and I didn't put the percentage of tax here, so you can make another tag 30% of tax on a same one. Go to paint. Okay, go here. So tax is always calculated on the profit, earning before profit. To 30%, sure. 2100 to 1150. Check it. The 2115. So this is your tax. So now you go by net earning. So net earning is earning before tax minus tax. Will get your net earning 49350. And if you want to calculate the margin, so there divided by revenue, percentage is already there, so doesn't need. So 30% is your margin, which is quite good. It's quite good. So I hope you understand all these things and all the calculations what I taught you here. So what we do in the next video, I'll make it for next 5 years so that you can know how we do that. Very much.